Market outlook. Calendar week 37. Week 36 was marked by uncertainty and rising expectations of a rate cut. It became clear that markets currently operate within a delicate balance between the hope for monetary easing and the ongoing reality of inflationary pressure. In such an environment, it is not action, but discipline that determines long-term success. Quantum data analytics deliberately refrained from issuing any trade signals in week 36, not out of passivity, but as a strategic decision. When market structures lose clarity, doing nothing is often the smarter move. Looking back, two themes dominated last week: the US labor market report and persistent inflation dynamics. In August, the US economy created just 22,000 new jobs, far below the 75,000 forecast. Simultaneously, the unemployment rate rose to 4.3%, marking the weakest job growth in nearly 2 years. It was the clearest indication yet that the previously robust labor market is beginning to turn. For the US Federal Reserve, this is a double-edged signal. On the one hand, the economic slowdown opens the door for a first-rate cut in September. On the other hand, inflation remains stubbornly high. The July Producer Price Index rose by 0.9%, once again highlighting persistent pricing pressures, especially in the services sector. This tempers overly aggressive rate cut expectations. The Fed is under pressure. It must respond to a cooling economy while maintaining its credibility in fighting inflation. Markets reacted sensitively. Yields fell, but risk assets such as tech stocks and digital assets declined significantly. The Crypto Fear and Greed Index dropped from 53 to 44, signaling heightened caution. Bitcoin dominance rose to 58.2%, suggesting that capital is flowing back into BTC as a digital safe haven. Smaller altcoins, on the other hand, lost relevance and liquidity. The decision to withhold signals in week 36 was not a sign of uncertainty, but a reflection of our philosophy. We act only when the market provides structure. In an environment shaped by contradictory macro signals, we prioritize capital preservation and strategic flexibility. Our systems observe, analyze, and weigh scenarios, but they do not act blindly. This is the difference between algorithmic insight and mechanical automation. At Quantum Data Analytics, we pointed to a potential Fed rate cut in September as early as May 2025, long before it became the mainstream view. Back then, it was a minority opinion. Today, it is the market consensus. This development confirms the strength of our forward-looking, data-driven approach. Our forecasts are not speculative. They are the result of disciplined macroeconomic modeling and early indicator analysis. In the upcoming trading week, week 37, several highly relevant macro events are scheduled that could shape the monetary policy trajectory for the months ahead. On Wednesday, China will release its latest consumer and producer price data. These numbers offer insights into global demand dynamics and could influence commodity pricing and inflation-sensitive assets. Also, on Wednesday, the European Central Bank will announce its interest rate decision. While the market expects a pause, the subsequent press conference could shift expectations. Like the Fed, the ECB faces the challenge of balancing economic slowdown with persistent inflation. Any deviation in tone or guidance can have ripple effects across risk assets, including crypto. On Thursday, the main event of the week arrives: the US Consumer Price Index for August, including the core rate. This inflation report is the most critical data point for the Fed's rate decision. A continued disinflationary trend would support the case for a September cut, while a surprise uptick could trigger renewed market volatility. For Bitcoin, Ethereum, and others, the release may act as a volatility catalyst and potential directional trigger. Friday concludes the macro week with the University of Michigan Consumer Sentiment Index, a leading indicator of economic expectations. While it may have limited direct market impact, it holds psychological relevance in uncertain periods. From all of this, a clear strategy emerges. Caution remains paramount. Our systems remain active and ready, but our focus continues to lie on swing trading, selective positioning, and active risk control. We are not chasing short-term momentum. We are waiting for confirmed structures, technically and macroeconomically aligned, before reactivating signals. Until then, capital protection takes priority. Quantum data analytics. Analytical, strategic, innovative.